All right. We are going to go ahead and get started. I want to thank everybody for coming to this special presentation from Candace Major on a new investment opportunity. We're going to break it up in a couple of series of I'll present for a while, and then Alok will present for a while, and then we will have time for Q&A after. You can put your Q&A into the chat if you want, or you can just wait and we can have Q&A at the end. Can you see my screen?
Yes, it's all good, Trevor.
Awesome. Very good. Welcome. So again, I'm Trevor with Candace Major, and I have been a passive investor, active investor for 7 years. As many of you know, I've been a big dog now for 7 years. I joined the community. I've only been involved on commercial real estate, started out as a passive investor, invested in 20 syndications, and then I've been a deal sponsor 14, and this one will actually make me 15. So very excited about that. So this is Cedarwood Apartments. It is in Alvin, Texas. Here's a really nice shot of everything that you can see. It is 46 units. It's currently at 100% occupancy, but there's a lot of room for value add, which we'll be telling you a little bit later. It is a 1983 build. This particular opportunity currently is a 506B. 506B means because you're part of the big dog community, we have an existing relationship through the community. It also that you need to be a sophisticated investor, and that's why I provide education. Happy to answer your questions about that, but you do not need to be an accredited investor. I will mention a little bit later, we will be switching this deal to a 506C, so if you're not accredited investor, time is of the essence. So again, this opportunity is brought to you by Massive Masters, and Massive Masters is a mastermind that is a combination with Phil, Chano, and Olivia, and the Massive Capital team. So you can see here, our motto is if you hang out with successful people, they will brainwash you into believing in yourself and thinking you can achieve anything. So it's pretty powerful. Little bit of a disclaimer here. Candace Major facilitates these presentations by assigning and setting up the presentations, but they do not endorse or vet the opportunities. All people are required to do their own due diligence. So again, I'm going to give a very high level overview of this particular opportunity. And because I'm a little bit slow, we keep the math at 100,000. The minimum is 50 on this particular opportunity, but it makes the math work out pretty easy. So if you were to invest $100,000, we're estimating that your total return over 5 years will be $235,000. So you'll receive your initial 100 back, and you'll receive about $130,000 $35,000 in profit. We'll talk a little bit about that a little bit more when it comes, but this is what you see. This is an equity multiple of 2.35, an annual return of 26.5, or an internal rate of return, which is really the time value of your money, and then cash on cash of just a little bit under 8%. So I'm going to turn it over to my good friend Alok, who is going to take over the presentation till I come back.
Thanks, Trevor, and hello and good afternoon, everyone. This is Alok Agrawal, and I'm really excited to present this Cedarwood awesome deal. So you can see here, I'm the lead GP in this particular deal, and we have a team of successful people here. And we are in total, we have closed deal more than 31 deals, and we have 2146 units we are managing right now. And part of the deal, Rodolfo is working with us for the asset management. And can we go to next slide? Okay, the Manish is going to help us for the investor relations, and Trevor is also there to help us out for all these efforts we are doing. And we have many more successful entrepreneurs and the W2 employees in their job. And I'm here to, I'm fully dedicated to my multifamily. I'm a chemical engineer and working for real estate for last 10 or 12 years. And this year, this is my third acquisition. We did the first one is in Franklin, which is close to Bryan, Texas, and right now that is also 100% occupied. And second one we did in Sealy, Texas, which is close to Katy and full share of Houston metro area. That is also 98% occupied. And this is the third one. I'm working very hard to make it successful, even better. So before we go further, I just leave a little disclaimer. So this presentation is purely informational. Any investment participation will be solely through the official private placement memorandum, that's called PPM, and related subscription documents only. Okay, so Cedarwood apartment is in Alvin, and Alvin is a high growth area within Houston MSA. It is like 20 to 30 minutes drive from the Houston downtown, 35 minutes drive. And this is pretty strong economy in the Alvin because of the diverse and recession resistance, the businesses over there. And the local economy is supported by multiple businesses like aerospace, healthcare, education, retail industry, and manufacturing and constructions. Education is pretty big here because Alvin ISD employs around 4,100 employees, and we are the Cedarwood apartment surrounded by 3 schools next to each other, like within 1 to 2 miles area. We have Alvin High School, Alvin Middle School, and 1 elementary school. And healthcare, we have 3 big hospitals are nearby: UTMB, Methodist, and Clear Lake Hospital is within reasonable space. And we have the Johnson Space Center within commutable distance. So basically, and the manufacturing construction is pretty high there because we are in close by to chemical plants. There's always something is going on there. And retail industry is pretty solid. The reason is it's on Highway 6. And we all know we are from Houston. Highway 6 is the center of entire retail centers. So it is surrounded by all these businesses, which is making it very strong. The very impressive thing is here, 15 minutes drive from Cedarwood, the 2,900-acre single-family home is under development, which is called Preservation Creek. So that shows the strength of the overall this opportunity or this location. The median home price is 292K, which is not easy to afford everyone. So in all, this is the place where people can live there comfortably and with the all maintenance and everything. Property right now, 100% occupied, which is huge, and cash flowing from day one. It is supported by Alvin's strong supply and demand fundamentals, as I explained, and we are acquiring Cedarwood with a purchase price of $3.675 million. Current offering is 506B, and which is regulation private placement. Okay, this is an interesting slide. So if you look at here, this is 46 units, which is 100% occupied right now, and this is very good unit mix in the terms of the owner. The ownership would always like to have more 2 and 3 bedrooms. So if you notice here, out of 46, 31 plus 8, 39 are 2 and 3 bedroom. So that means we will have more revenue each unit if you average out. So 90% are 2 and 3 bedroom, which is good. So that's why the average unit size is also bigger. If you compare all 46 units, excuse me, they're very spacious. I've seen that our team saw each and every unit, they're pretty spacious. And if you look at the green space, which is very nice between the two buildings, people can enjoy their time. And I've seen there, they go walk there, sit down there. And it is very family friendly, multi-family, and a lot of kids are there. So I've seen there, they enjoy all the green area. The washer dry connections are there. And we have outdoor recreation area, and we have on-site maintenance and leasing office on site. We have parking space. There are 46 units, and I think we have 72 or 74 parking space, which is more than enough. And we have the best part is with this properties, it is next to Alvin High School, which is huge. Okay, this is the overview of the place where we are. On the right hand side, if you look at the Cedarwood apartments, it is next to Highway 6, where we are circling this arrow. This is Highway 6. And Highway 6 is the lifeline of Houston. We know all the retail centers are on this Highway 6. And the Alvin is close by to Dickinson, Lake City, Friendswood, Pearland, Manuel. Those are all growing area, or I can say some of those are pretty established. Kima Boardwalk, all the way right hand side. This is Kima Boardwalk, which employ a lot of workforce over there. It is not far from Pasadena, LaPorte, which has a lot of chemical plants, and people commute over from Cedarwood to all these places. On the left side, the micro level, you will see the hospitals I mentioned before, UTMB Health in dark blue, Clear Lake Regional Medical Center, and Houston Methodist. So there are many businesses out there, and which is give us a comfort, like people are going to stay there, they want to stay there because there's close proximity for their workplace. Okay, so this is the investment, like what we are doing. So we are buying this at a $3.675 million price, and the equity raising, equity raise is $1.4 million. And we are having a debt from the agency loan, Freddie Mac. We are working with them at 6.54 interest rate, and we're negotiating a little bit, but it will be around 6.5%. And the equity, the debt would be $2.8 million. Here we have certain 70-30% our LP and GP distribution, and we are targeting return of 2.31x to 2.35x. Okay, so this is another tabular form of our numbers, how it is going to come. So our minimum investment is $50,000, but to make it simple calculation, we are doing it with $100,000 assumption. So with the $100,000, if you look at this row number 2, which is member annual cash flow, easily we are achieving $7,000 to $8,000 every year with our business plan and all that. So every year with $100,000, we are achieving 7 to 8%, and in the bottom we have mentioned 7% preferred return. Easily we will get it. And our equity multiple is going to be 2.31x with the same numbers we are projecting here. And the very good part here on the right hand side, you see the bonus depreciation. What does it mean? Since we are closing this deal in around November time frame in 2025, so after 1 month, when we're going to prepare our 2026 tax preparation for 2025, we can claim our bonus depreciation, which will be right now, it's not confirmed numbers because we haven't closed, depending on the number of days of 2025 we spend, should be in the range of $45,000 to $50,000. So what does it mean? If you spend $100,000 in this deal, you can claim around $50,000 in your bonus depreciation year 1. You can write off. which is huge. But you have to talk to your CPA and your some concerned person who can who can, based on W-2 income, they can guide you better. But you will get it for sure, around $45,000 to $50,000 for the tax benefits if you are participating with $100,000 in this deal. Subsequent year, you will see the little bit more, not more, but some more depreciation will be year 2 and onwards will be there. But maximum we will achieve in year 1. Okay, so our business plan is pretty simple, the 3-way process. So what we're going to do, our main goal is to make the revenue more and the expenses low so that we have more profit. Very simple. So we are going to do some deferred maintenance because while our team visited there, we saw there are some, some cleanness is required, some landscaping required, some potholes are there, parking lot restripping needed. So basically, we are going to give the refreshed look of the entire multifamily, this 46 units from interior, from the exterior point of view. So that will give when the residents are entering, they will see the changes in the building. So painting, some hardy planks are a little bit older, so we have to remove those and we have to paint those hardy planks. Needs to be the parking lot and all. So this will give us a refreshed look. The plan is to complete this within 3 months. And after 3 months is kind of in the spring. Spring is the perfect time for her step number 2. Step number 2 is to increase the rent to bring to the market by $40 to $50 increase, or around $40 we are anticipating easily. We'll achieve it by doing the step 1 by refreshing the entire apartment complex. So while doing this will give us more revenue, but at the same time we have to optimize our management to keep the cost low. How we're going to do this, I will tell you in the other slide. But yeah, there's a plan to make the management remote and make the cost low. Step number 3 would be long-term improvements. So we have like around out of 46, there are around 17 or 18 units which are not being upgraded. What does it mean? Because of the tenants are there since last 10 years, 15 years, I have seen those apartment units. They don't want to make those upgrade because a lot of stuff is there. They just said, okay, leave us like that. So as soon as every unit is going to get vacate, the time comes, we are going to upgrade each and every unit by the flooring, the paint, the countertops, and the appliances. By doing that, easily we can achieve $150 more rental income per unit. So that is the long-term plan. But by this, we are going to achieve our plan easily. This is all within our control. And one more thing I just forgot. Yeah, this additional we are. I'm sorry. No, that's fine. You can leave it there, Trevor. That's fine. So we are also adding some revenue streams over there to additional revenue to bring our revenue more, which is going to be the tech package, and we are going to make some covered parking, and which will be this is here assigned covered parking spaces, tech package, and some vending machine and Amazon boxes. So what does it mean? We have to spend a little bit money. It's not a whole lot of money, but we can see that tremendous value addition. Ultimate goal is our higher revenue and keep the expenses low. This is our goal, and higher revenue will bring the multiple streams, and we can achieve it. Okay, this is my favorite slide, why we love this deal. So while our team was looking for this deal, we went to the T12 rent roll and all that, and we found this is the first apartment complex we have seen where we have minimal late payment, no eviction in the last 2 years, and no bad debt. I mean, this is phenomenal. Fundamentally, it's very strong. That shows the residents are pretty hardworking. They want to stay here. They're loyal to the community, and they will stay long, which has seen in the last 5 years, we always have 96% occupancy. So that being said, the tenant base is pretty strong. So that shows the dynamic stability in the market. Of course, the strong workforce is there. Chemical plants and Alvin ISD is kind of the place to go. Number 2, which I like most here, the Alvin High School. It is just next to Alvin High School, like 0.2 miles from there. So any incoming, outgoing traffic to Johnson Street, they will see the Alvin High School. Everybody is aware. I went to a couple of places there. Everyone knows what is Cedar Apartments, since its visibility, which is pretty good. The strongness in the market, we can see the 2,900-acre single family home in development that's called Preservation Creek, which is 15 minutes drive to this place, which is amazing. That shows the pretty strong location. Low crime rate, this is like 75% lower than Houston, which is amazing. And the household income is pretty good here, $69,000 to $70,000. So that means the people are there, they are working hard, and they are living nicely and comfortably. Of course, there's a value addition here. So all those make this factor pretty strong in this deal to make it to go. So investment timeline. So like we are right now, we started this project in August and September, and we started LOI, PS, everything is done. We are right now in October time frame, and due diligence is just completed, and everything came out good, perfect. The last week only we had the inspection from the 3 departments. Everything came out good. It's all good here. So we are October, November. We are doing the capital raise where we are right now in this time zone and this time frame. November is funding and closing, and we are aiming to close on 22nd November, maybe a week here and there. But November is the time frame to close this deal.
Excellent, thank you.
Sure. All right. So this is a lot of numbers. So I don't want to go into details. I'm very welcome if you ask now or later any question on this. This is I'll just go very high level. If you look at number one, this is primary source of rent capture. So here on number one, in very short, I should say that we are bringing more revenue. So residential income, which is 5653 on the actual first column, is gonna be $19,000 and so next year $27,000 or so. So the whole idea is to first top portion should be revenue should be more, expenses should be lower. So we are doing the more revenue by increasing the other streams like the tech package and all that. So that will bring a more revenue. Expenses we are going to bring down. Like we are implementing number 3's water and conservation program. That will bring our water pricing 15 to 20%. That will be huge saving. If you multiply by 46 unit, multiply by 12, this will be huge saving. Tax and insurance, if you look at the real estate taxes, is going to go down a year after because we are buying at a lower price from the CAD value. So right now they are paying 100,000 and so, and we'll be getting $90,000 tax in the year two. So that will be huge benefit. And number two, we are negotiating very hard with the many brokers for the insurance. Currently, they are paying 71,000. We are in the range of 60, and we are aiming for 55 to $56,000 for the apartments insurance, which we are going to achieve. So the numbers will be better. But right now, we are aiming for around $60,000. The last one is impact on NOI. So very last row, if you look at the NOI right now, NOI means net operating income, profit and loss. So currently their income is $243,790, let's say $244,000. With our higher revenue and lower expenses, we are anticipating $332,000, which is increased by almost $90,000, and the year after another $30,000. So we have a certain game plan with our experience, expertise, and the team. We are very confident we can make the NOI better. NOI better means more return to the investors. Okay, so this is a very simple slide for the rent comparable. If you look at here, the Cedar is surrounded by, of course, many apartments. And in the bottom of effective rent, our rent is right now in the 1.14. So let's say 1.15 per dollar square foot, and the other apartments in the range of 1.4, 1.38, 1.58. So with a refresh and a little bit more marketing, we are pretty confident we'll bring it to the market rent. Of course, Alvin High School is the most thing, which I love it. Alvin High School thing. Okay, so they are the employees within 10 miles range of this apartment Cedarwood, and the main driving force is Alvin ISD, which employ more than 4,000 employees, and I've seen many of them live here because of the close proximity of the 3 schools, and the ISD building, ISD office is also not far from there, because Alvin downtown is like, I should say 0.2 or 0.1 mile from this Johnson Street or Cedarwood. So it's pretty close by. All the businesses are nearby, and these are the list of all the small, no retail industry, but all the small, I should say plants or manufacturing things, which employs a lot of employees. Okay, before we go to this slide, I forgot to mention one thing, which is very important. We are partnering with Oak Leaf Management Company. I just got a list like 1 hour before. They own and they manage 3 more apartments in Alvin. So we are partnering with a very strong team who are going to take care of this all operations, and we under our team guidance. And they have presence of 3 more apartments. They are managing last 15 years. Let me tell you exactly. So Morgan Oak Apartments last 11 years they are managing, which is 0.2 miles from there. Oak Park Village is last 9 years. It is also in Alvin, and there's one more. They are managing last 5 years. In over and all, they know the residents, they know the market, and they know the city very well. And the employees who work in those apartments from Oak Leaf, they live there. They live nearby, so they know very well this market, which is pretty huge for me because I wanted someone to operate it for us who is well aware about this area. And they are managing our Sealy apartment with 98% occupancy. And which I've seen the 2 strong point with these guys, with the Oak Leaf management. They are very strong to make this lease up the apartment, any vacant unit, and they are pretty good to keep the expenses low. Those 2 things I love to make the more income means more return to the investors. Okay, so this is this is pretty good. If you notice here, the population growth since 2020, we have 11% population growth, which is huge. And we all know Houston is growing like any other market. And this particular part is surrounded by small towns. And Alvin is kind of leftover. And I feel it is going to go tremendously in the next few years. And the good part is here that the crime rate is pretty low here compared to Houston and other areas. People are educated, and education, they are good preference. In all, this is a pretty good market. And the job sectors are, everything is there: oil and gas, petrochemical, ports, education, manufacturing. So everything is there, and I believe this will be a tremendous opportunity for anyone to come over here and to enjoy this, the investment. So I will say thanks everyone for your time, and I look forward to answering your questions. Hopefully, partnering up with you on Cedarwood.
Awesome.
Back to
Thank
you,
you.
Trevor.
So I always like to call everybody to a decision. You're one decision away for a new life. So start your journey to getting passive income. I have put my contact info into the chat. My goal is to help 100,000 people reach financial independence through real estate investing. Anybody who's been attending my commercial calls, which by the way happen every Monday at noon, this is my big thing. I originally had 10. Phil bumped my challenge up, so here we are trying to fulfill my challenge. So there are two places you can scan here, and I'll also put it in. So the first one was obviously book a call, which I put into the link. And then there's another one. This is the link to our investor portal. So you would go to the investor portal. The minimum is 50,000. You would go to the investor portal and you would create an account. So you can create an account as a person. You can create an account as an LLC, or you can create an account with your self-directed retirement funds. It was a matter of how you want to do it. And again, if you get stuck, you have any questions, you're not sure, please book a call with me. I'm happy to answer any of your questions. Oh, I thought there was one more slide. I must have changed the order around a bit. But there's one thing I want to make sure that I'm gonna leave that up for a second, and then I'll pull it off for Q&A. There's a couple of things I want to make sure that we really mention to you. First of all, this apartment is being purchased with fixed rate debt. So we all think interest rates are going down, but what if they don't? We're on fixed rate debt with this particular thing, so there is no risk of any interest charges. Another thing I want to make sure that I point out, you saw that these units are an average of 970 square feet. We are buying these for less than $80,000 an apartment. Where in the world can you buy 980 square foot self-contained living for less than $80,000? It is an amazing purchase price. And then again, it's based in the Houston market. A lot of the Massive Capital team is based in the Houston market. A lot of the partners are based in the area. So we will have a lot of boots on the ground and eyes looking at the particular property. And again, I want to make sure that you understood when we have this 7% preferred return. I'm just going to scoot back up to this slide here. Sorry, I'm going to make everybody's head spin as I scoot fast. So right now, it looks like we're going to meet the 7% threshold. And I want to make sure that everybody understands, until you make 7% on your money, we don't make any money. You have to make 7% on your money before the 70-30 split starts. So this is a really important investor first approach. You get paid first. I also want to make sure that you understand, you remember, we're buying this apartment, we're getting the debt, but you are going to be a fractional owner of 70% of this apartment complex. So think about this. Your guys are putting in about 30% of the capital, and you're owning 70% of the asset, which means you will get 70% of the returns. So I want to make sure that that's very clear. This is an awesome opportunity for our fellow big dogs. You can put questions in the chat. You can unmute yourself, and there are no stupid questions. So I know a lot of people think, oh, I don't want to ask that. McGenna, did you? Go ahead.
Yes. I just had a quick question, since it's, right in Houston downtown, and I know, what about hurricanes, and, is it covered? Obviously it will. I just wanted to know, how well it is covered for that.
Okay, good question. Yes, Megan. So we are in Houston. Of course, we all know this is all hurricane prone area. I'm here since 2000 in Houston, last 26 years.
Got it.
We have seen the Harvey. We have seen a lot of hurricanes came, and fortunately, we are talking this our Cedar apartment. There's a maintenance guy. He's there since 2004. He has seen during Harvey, 70% Houston was flooded. It was never flooded, which is huge. Number two, we have this is not in flood zone, which I forgot to mention. So thanks for asking this question again. Yeah. So this is not in flood zone. Of course, there's always winds and hills can happen, and we are ready for that. We have a pretty solid insurance covered. So anything happens, each and every apartment should be covering for this hail and wind damage, and this is not in flood zone. So we are very well covered, and we are not really worried about that. But definitely we are cautious, and we are monitor this.
Got it. Okay. Thank you so much.
Thank you. It's a good question. Any other questions? Feel free to ask away. Who's interested in investing? You want to give me a thumbs up in the chat? I'm going to put you on the spot. Make that massive decision today.
One more question.
Certainly.
So we are going to be looking into buying this right now, and then in 5 years we are selling this, right? That's the kind
of the plan, Meghna. Yes, right? That is the plan, Meghna. Yes, that is the plan, Meghna. Yep. Okay.
Because right now I know with everything, I'm a realtor, by the way. That's why these
sure.
A lot of cautious questions. But since real estate is not on the what should I say, on the rise right now, but it's really slow. And I know people are not moving that much, and we might get hit even more next year, or say. So how how much buffer do we have? That is kind of my question.
That's a good one. So we are missing one slide where we have answered all those questions. And number one question is I will say when the market is strong, people buy and they make mistakes. Right now, market is down. This is good time to buy.
Correct.
Number
yes,
one reason, right? Number one reason, interest rate. Interest rate, we are anticipating it's not going to go more than this. Right now, 6.5 we are getting. We are anticipating a couple of meetings happening with the Fed government and the yield is showing it was going to go down. So what does it mean? Whenever interest rates goes down, your real estate business already, the housing price goes up. Same thing for the multifamily, the price will go up. Personally, I believe this is the best time. Why? Number one, interest rate, and number two, people are scared. Scared means they don't want to enter the market, and I believe this is the perfect time. Maybe you're right. I completely agree with you. Maybe a year or 2 years, maybe a little bit down, but people have to live. They cannot go anywhere, and this is the kind of very economical apartment complex, $1,200, $1,300 range, and everybody is working in nearby sector. So my take on this: people have to live. They will live, and maybe we are not able to increase $30 or $40 rent for first year. I'm just saying, I'm thinking hypothetical situation that can happen. But we have a backup plan. We will add some more revenue streams by giving them some comfort, and people don't mind to pay like covered parking. If we asking, hey, give me $20 more for the covered parking.
Right.
Houston heat is pretty bad for 6 months, 7 months. People don't mind. I've seen those guys are pretty nice in the apartment, and they will love to give you additional income if you're taking good care of them. So if we are lagging in one part, we are not able to increase the rent because of the market, but we will have some backup plan to make this our revenue better.
Perfect. And then my one more question I had. So I know the Fed is going to have meetings, and as you said,
yes.
The interest rate is going to. Do you refinance such projects? Because on a typical home we do, but I don't know how this commercial thing works. But
yes, Meghna. Yes. So what happens? Like this is the question for the lender. We discuss with them. There's a pretty good pricing you have to pay because there's a huge work involved in the multifamily lending versus single family. So there is a good pricing, but we are in the understanding after 2 years or 3 years, I believe, if the prices are really attractable, we can refinance it. We have to pay I think 2% penalty, which is like $100,000 something. But if the number makes sense, definitely yes.
Exactly. Right. Exactly.
Yeah. So refinance is in our mind after 2 to 3 years, because after 2 to 3 years, the penalty goes lower. Right now, if we do first year, it is, I think, 4%. Then it goes 3%, something like that. But yes, we are open. We will work with the numbers. If the number makes sense, 100%. The ultimate aim is to give better return. Better return is my ultimate goal. Yes.
Right. Makes sense. Okay. Thank you so much.
Yeah. And again, a good point to put out here again is everything is aligned. We make more money, you make more money, right? We make $1, you guys get 70 cents of the dollar, we get 30 cents of the dollar. So there's a question here about your IRA. So the one thing I want to talk about here is this deal is going to fill up. Now, if you're moving the funds, you can create your IRA, get your account, and as long as we know the money is coming, but we can't wait forever, because basically the way it is you fill out your paperwork and the money in the bank. Once there's $1.4 million in the bank, we can't take any more money. So again, work with us, communicate with us, but we don't want you to miss out. But we can't wait too long just in case somebody else has the money and wants to put in. I want to make sure I'm clear on that, right?
Yes.
And so, but start filling out, because you can set up your account pretty quick. Then you can go on Cashflow Portal and create your account. Yes. And then you tell us, hey, listen, my money's here. It's moving to there. They told me it's going to take 7 days to get there. As long as we're communicating, we're all on the same page. If you stop communicating with us, we'll take the money that first comes in. On our last deal on the mobile home park, we needed to raise $2 million. We actually had $2.5 million in commits in 14 days. And we actually had some money come in the same day. I had two $100,000, and we sent 50 back of each so they could both stay in the deal. So hopefully that gives you a good answer. We want our big dog friends to be in the deal, and we just have to be fair on both sides. Great question, though.
A quick question back on your refi. Potentially, if that was a refi, say in 2-3 years, would that be a cash out refinance, or is it just a refinance in and of itself?
Yes, and cash out refinance. Okay, yes, yeah. So cash out refinance usually we do when there is a good appreciation in the property. And we are not saying it's going to be appreciated or not, but the cash out refinance is more towards if you want to return the money to the investors. Of course, if we have a good appreciation, definitely we would like to take $1 million example and distribute to the investors. Hey, enjoy this, like your 30% back to you, and then we can still enjoy the same return with those if the value appreciate that much. So depending on the market, we are open for that. And if the time allows us, the number let us do that. I love it. The cash out refinance means we can distribute the money earlier, not 100%, but 30%, 20%, 40% to the
Of course.
investors. And with their 70% money in the game, they can get the same return. Yes, that is the plan.
And also, if say you hold it, to the 5-year term,
Right.
are you looking at just holding it through? Or are you doing any distributions like quarterlies, or is any of that a part of it?
Every year. So the plan is to do at least 2 times in a year. Not every quarter is too much, time consuming thing. So we will do the distribution every other quarter, and that is 7% return every year, regardless where we are. I mean, it will be pretty straightforward. 7% preferred return. We will take only after 7% return is given to all the investors. Once it is achieved, then the distribution go to the GP team. So our goal is to make it profitable, give the 7% preferred return to every investors. If the money is left, definitely, and believe me, I'm anticipating 8%, but we have to, better to commit low and give more. So I'm anticipating 8%, but again, I don't want to quote here. So 7% is preferred return. I'm anticipating 7 to 8% for sure. And the deal is solid. I mean, we have 100% occupancy, pretty good cash flow. So why not? We'll get the good return for sure.
And if you take a look at the slide I just put up, this is our estimation. So 7,000 the first year, 84, 72, 78, 85. So about $39,000 in distributions. And then this $91,000 is the profits from the sale. And then this is your capital back. So this is, and they're normally paid out about every 6 months.
Yes.
Mm-hmm. Was the prior owner, were they local, or were they out of the state or something like that?
Can you repeat? Sorry, I didn't hear.
The current owner.
Okay, great. I met him 2 days back only. He's from Texas. He's from Tomball area from Houston. So he currently own like 4 or 5 properties, and his time to exit is there. His 5 years is completing. So he said, I just want to, I have to return the money to the investors. He's very happy with the deal. He said he hate to sell it because it's very good cash flowing, but he has to move on because we take the 4 to 5 year time period. And he said right now he's getting good money. So with the game plan, he has to move out. But
right.
He's a great guy. Yeah, he said there is no issue, and he showed me a lot of things. I love it. I mean, he's a very quiet neighborhood. Nothing is there, and you will love it. So I'm on it. Yeah. So he's from Tomball, Houston. Yeah.
Okay, that's good.
Yep. Great.
Awesome. Any other questions?
If any more questions, Trevor, they can ask through you to me, and I will be happy to answer today, tomorrow, whenever. I love it. Any questions, I will love to do it. If I don't know, I will figure it out. So, I mean, everyone knows, no one knows everything, right? So, but I will try to answer. If something is there, I will dig into further and will answer back to you.
I do have one more question before we leave. I'm sorry. This is Darius.
Sure.
This distribution that you mentioned, these are, did you say every 6 months, every year?
Yes. So it is right now. Sorry, go ahead. Yeah, go ahead. Sorry. Mm-hmm.
I'm sorry. And will they be just automatically sent out or paid out? And then in addition or that extension, can they be postponed, for example? And if I decide that I don't need this distribution, do I have a choice to wait with the distribution all the way to the end?
Got it. That's a good question. So I can ask my CP about it, because as I said, everyone doesn't know everything. So this is I can presume we have to distribute the money end of the year. We can hold on. I'm pretty sure we can hold on for 6 months. We can give it to end of the year, and but we have to distribute the money. We cannot hold for more than a year. We have to clear our accounts. We have to bring the numbers and to file it to the SEC or whatever, Yeah. So yeah, we can do that. Darius. Yeah.
Okay. Thank you.
Sure. And you were asking the same one more question, like how the distribution will go. Once we are there, we will ask each and every investor their bank details. It will be automated to the bank account. The ACH information will be provided. It will go to your bank account directly. But if you don't want to opt it for 6 months, we can hold it and we can block the and the end of the 12 months we will have to distribute. So we will distribute end of the year the full amount. That makes sense?
Excellent. Well, thank you, everybody. I'm again going to just quickly put my contact info in the chat. If anybody has any questions, again, I believe that this investment is going to get filled in the next 2 weeks. This is a great opportunity. So if you're interested, don't delay. We really appreciate you showing up. A recording of this will be sent to you probably the beginning of next week. So take a look for that. And again, if you need to talk to me, just book a call and let me know. Thank you very much. All right. Have a great night. Good night. Thank you.
All right. Thanks, everyone. Thanks, Trevor. Perfect.